Imagine you're a well-funded AI developer, right? You're building this a groundbreaking new autonomous agent, and you urgently need to buy a digital identity for it, like a
Yeah.
clean, recognizable name.
Yeah, you need that brand recognition.
Exactly. Now, if you just log on to a public digital marketplace and click buy, you might instantly trigger this, massive million-dollar bidding war against yourself because every speculator on the internet realizes what you're up to.
Oh, totally. You're shining a spotlight on yourself.
Right. So what do? Well, you head into the shadows. Today, we're taking a deep dive into a really fascinating shift in how digital identities are actually bought and sold.
It's a huge shift.
It really is.
Yeah.
We're looking specifically at Solana domains,
Mm.
and we're unpacking why the absolute most valuable premium digital real estate is it's vanishing from public marketplaces entirely
Mm.
and moving to these private over-the-counter desks.
Yeah, the OTC market is where the real action is happening right now.
Brought to you by Negotiate.name, the simple way to bid on a curated collection of over 3,000 Solana domains without locking up your Solana. Browse premium.sol names, make unlimited offers, and see what you can negotiate before anyone else does.
Love that.
Okay, let's unpack this, because right out of the gate in that sponsor read, we heard the term .sol names. And, if you aren't living and breathing the Solana crypto ecosystem every day, we should probably establish what that actually is before we get into how they're sold.
Yeah, good idea. Let's set the baseline.
So a .sol name, a Solana domain, it's basically your master key in this digital landscape.
Right.
It acts like a website URL, a payment address, and a brand identity all rolled into one readable word. So instead of sending funds to some, random string of 50 letters and numbers, you just send it to something clean like coffee.sol.
Right. And that utility is exactly why they've become so valuable. I mean, it's an entire identity layer for the internet.
Exactly.
But to understand the shift we're diving into today, we really have to look at that phrase you used in the intro, the over-the-counter or OTC desk.
Yeah, see, when I read OTC desk in our source material, my mind immediately jumped to Wall Street.
Oh, sure.
I'm picturing giant institutional trading floors, people in expensive suits shouting at each other, rows of blinking Bloomberg terminals.
The whole Wolf of Wall Street vibe.
Exactly.
Yeah.
But I'm guessing since we're talking about crypto domains, it isn't quite that dramatic. It sounds more like just a private chat room.
Yeah, you're hitting on a really crucial distinction there. In traditional finance, OTC really just means any trade that happens outside of a public exchange.
Okay.
It's just an alternative to buying or selling on an open, highly visible marketplace. So in the context of our deep dive today, an OTC desk for Solana domains isn't a corporate institution at all.
Right, no suits.
No suits. Think of it less like Wall Street and more like a high-end art dealer's private viewing room.
Oh, I like that comparison.
Right. It's a space where buyers and sellers can talk directly
Mm.
through direct messaging, emails, or these new private negotiation platforms. It's a structure built so serious buyers can actually make offers on premium names without having to fight through a chaotic public feed.
Which brings up a really interesting friction point.
Mm.
Because anyone who spends time in the crypto space knows that traders are totally obsessed with public markets.
Oh, absolutely obsessed.
They want instant liquidity. They want 24/7 charts, market caps, order books, the moving candles. They want to see the action.
Yeah, the dopamine hit of the chart.
Exactly. But treating a premium Solana domain like a regular crypto token feels wrong.
It is wrong.
It's like trying to price a unique historic mansion by looking at the average per square foot price of a massive suburban housing tract. You just can't do it.
Yeah, what's fascinating here is that the mansion analogy is absolutely spot on because it highlights the fundamental difference between a commodity and a unique asset. I mean, a standard crypto token is a commodity. One token is exactly the same as another.
Sure.
But a premium Solana domain, say a common first name like alex.sol, or a clean industry category like pay.sol, or one of those rare three-letter names, those are entirely unique.
They have their own vibe.
They have their own story, their own specific use case, and, most importantly, their own specific buyer pool. And because they're unique, they just don't have daily trading volume.
That makes sense.
They might sit quietly in a wallet for 6 months or a year until exactly one highly motivated buyer appears.
So it's a complete inversion of the standard trader's mindset.
Complete inversion.
Because the token trader looks at a chart and asks, what's the price right now and can I flip this in 10 minutes?
Right.
But someone looking to acquire a premium domain is asking, who actually owns this historic mansion? Will they sell it to me? And what is this specific property worth to my specific business?
And that shift in mindset demands a completely different market structure.
It has to, yeah.
You just can't apply standard high-frequency trading logic to unique digital assets. When patience and negotiation matter more than instant liquidity, a private offer mechanism isn't just, a nice to have. It's really the only way a deal actually gets done fairly.
I hear that, but I'm going to push back a little bit on behalf of the sellers.
Okay, let's hear it.
Let's say I own Alex.sol. I know it's a premium, historic mansion of a domain.
Oh, it's prime real estate.
Right. So why do I need to hide in a private viewing room? Why not just list it on a public marketplace for, say, $500,000? Go to sleep and see what happens.
Just put it out there.
Yeah. If someone wants it, they'll pay the premium. What is the actual harm in just putting a massive price tag on it in public?
Well, the harm comes down to what our sources call bad signals. Public listings are great for everyday, lower-tier inventory. But for highly unique assets, public pricing creates this massive psychological trap for the seller.
How so?
Think about how buyers interpret that public listing. If you list Alex.sol too low, you're obviously leaving money on the table.
Right. Someone snaps it up instantly, and you realize you completely undervalued your own asset.
Exactly.
Okay, but what if I list it sky high? Like I said, $500,000.
If you list it incredibly high, serious buyers might look at it and assume you're completely unreasonable, so they won't even bother starting a conversation.
Oh, I see.
But here is the real danger.
Okay.
Let's say you list it high, a month goes by, and no one bites. So you start inching the price down.
Blood in the water.
Exactly. Lowering your public price signals weakness to the market.
Yeah.
Buyers see that downward trend, and they just wait. They let you bleed out, assuming you're desperate for liquidity.
That is brutal.
It is. And furthermore, if a premium name sits on a public marketplace for too long, even if the price is fair, the market eventually assumes there's simply no demand for it. It becomes stale.
Right.
The perceived value drops just by virtue of it sitting on the shelf for too long.
That makes total sense. It reminds me of looking at the floor price of a digital collection. The floor price is basically the cheapest item you can buy in that category right now.
Yes, the absolute minimum entry point.
Right. But if all the sellers with premium names are hiding in the shadows to protect their assets' value, then looking at the floor price is a massive trap.
A huge trap.
You're basically walking into a giant retail store, looking exclusively at the discount clearance bin full of typos and random long phrases, and assuming that represents the entire store's inventory.
Right, you're looking at the junk.
Exactly. You aren't seeing the premium goods because the serious investors refuse to treat their assets like clearance items.
That's a perfect visualization. The serious players hold, they watch, they wait to be approached privately. And if you're just casually scrolling a public marketplace looking at floor prices, you're entirely blind to the real market.
Wait, so if the seller is hiding to protect their assets' perceived value, doesn't that create a massive strategic advantage for a certain type of buyer?
Oh, absolutely.
Because if I'm a stealth startup or a high-profile creator,
Yeah.
telegraphing my moves to the public market is a terrible idea. Here's where it gets really interesting.
It's corporate suicide in a young market.
Yeah. Privacy isn't just a seller's preference. It's a buyer's absolute necessity. I mean, the sources give some incredibly specific examples of this. Imagine a builder working on a stealth project in decentralized finance.
Right.
If they suddenly start publicly bidding on a bunch of category-defining Solana domains, the broader market is immediately going to catch on to what they're building before they've even written a press release.
Or the AI agent team we talked about in the intro.
Yes. If I'm an AI developer and I start publicly scooping up specific agent names, I'm shining a giant spotlight on my own strategy. My competitors will notice the land grab, and suddenly the price of every AI-related domain skyrockets.
Yeah, the moment that spotlight hits, the market adjusts. The quiet buyer has a massive advantage in any early market, and private negotiation is the only way to preserve that advantage.
It's just smart business.
It really is. Which brings us to a vital concept from the sources, the natural buyer.
Oh, I love this term. Just based on the context, I'm assuming a natural buyer isn't, a crypto speculator hoping to flip a domain for a quick 10% profit.
No, not at all.
Is someone who actually has a fundamental real-world utility for the name, like a coffee roaster who desperately needs coffee.sol. Does that track it?
You've got it perfectly. The utility dictates the value. A natural buyer is a person who wants their actual real-life first name, Or it's a new payment app that needs a clean, trustworthy identifier.
Right.
Or maybe a meme community that needs a treasury identity that matches their community token.
The name actually does something for them. It's functional.
Right, and when a natural buyer enters the picture, public floor prices completely fail. Because coffee.sol might be worth, I don't know, $200 to a random speculator who's just guessing.
Sure.
But to a global coffee brand, that domain might be worth $20,000. A public automated algorithm cannot capture that nuanced, context-dependent value.
It requires a conversation.
Exactly.
A private offer lets the global coffee brand reach out and explain, look, here's my specific use case.
Yeah.
And the seller can understand why the name is uniquely valuable to that specific entity, leading to a negotiation that reflects reality, not just an algorithmic guess.
You simply can't do that with an automated buy now button. The human element has to return to the transaction.
I'm tracking with you. The logic is really sound, but I have to play devil's advocate here and push back pretty hard on the logistics of this.
Let's do it.
If all the good stuff, the premium names, the natural buyers, the stealth AI teams, if all of this is happening in DMs and private emails, isn't that just a recipe for a completely chaotic, illiquid nightmare?
That is a very valid skepticism.
I mean, my spam folder's full of fake offers. Doesn't the shadow market just get flooded with scammers and what the sources call fake liquidity?
It does.
So how does this actually function smoothly without devolving into a messy Craigslist situation?
Well, if we connect this to the bigger picture, you're highlighting exactly why unstructured private messaging, like just relying on Twitter DMs or Discord, is a terrible long-term solution.
It's too noisy.
Way too noisy. That's why the text points towards structured private offer platforms becoming essential. They specifically combat that fake liquidity.
Okay, explain that term to me, fake liquidity. Like a market that looks super busy but nothing is actually being sold?
Exactly that. A public marketplace can look incredibly active because there are thousands of assets listed and visible bids everywhere, but listings aren't liquidity.
Oh, that's a great point.
A seller can ask for an outrageous amount, a buyer can bid a ridiculously low amount, and the market looks buzzing, but no real deal's ever clear. It's just noise.
So the structured platforms step in.
Right. Structured private offer platforms are designed to cut through that noise. They curate the inventory, they provide a clean, verified path for a buyer to submit an offer, and they ensure the seller actually sees it, separating real, serious intent from the scammers.
Okay, so they organize the chaos. But let's get into the mechanics, the actual how of this, because there's a massive pain point in traditional crypto that I think we need to explain.
Oh, the lockups.
Yes. In a normal public crypto marketplace, if I want to make an offer, I usually have to use a smart contract and put my funds into escrow. Let me do a quick ELI5, explain like I'm 5 for anyone unfamiliar.
Go for it.
Escrow in crypto basically means I have to lock my digital money inside a transparent glass box. I can't touch it, I can't use it for anything else, and it just sits there locked up while I wait to see if the seller accepts my bid.
Sometimes for weeks.
Yes. It's incredibly frustrating.
It's a huge barrier to entry. You're committing financially before you even know if the seller is alive, let alone willing to negotiate.
Right. But the sources argue that these new private offer platforms function best without lockups. You don't have to tie up your Solana in a digital glass box just to ask a seller, hey, would you take this amount?
And removing that friction is revolutionary for adoption. I mean, a private offer without a lockup is essentially just an invitation to dialogue.
It's so much more approachable.
It invites traditional businesses who might be terrified of complex crypto mechanics, and it allows creators to just start a conversation without draining their active trading wallet.
But wait, I have to stop you there.
Yeah.
If there's no money locked up in a smart contract during the negotiation, how does the deal actually happen safely once we agree? If I'm the buyer, and we agree on a price in this private chat, I'm not just going to blindly send you my money and hope you send me the domain.
Yeah.
How does a trustless crypto ecosystem execute a handshake deal?
That is where the beauty of the structured platform comes in. The negotiation happens off-chain, right, with no funds locked up.
Okay.
But once both the human buyer and the human seller agree on a price, the platform generates a custom peer-to-peer smart contract specifically for that exact transaction.
Oh.
It creates a secure, temporary digital vault. The buyer puts the funds in, the seller puts the domain in, and the contract swaps them simultaneously.
So it happens all at once.
Exactly. If either party backs out at the last second, everyone gets their original assets back. You get the human flexibility of a private chat backed up by the mathematical security of the blockchain at the moment of settlement.
That is brilliant. It completely solves the trust issue without requiring the annoying upfront lockup.
It really is the best of both worlds.
And I'm guessing that kind of human-first flexibility opens the door to much more complex deal structures. I mean, the sources mentioned something about curated bundles.
Yes, bundles are a massive advantage of the private room. Public marketplaces are notoriously terrible at facilitating complex deals.
How so?
Well, imagine a buyer reaches out privately about a specific payment identifier like checkout.sol. During that conversation, the buyer can simply ask the seller, hey, what else do you have in this category?
They can essentially ask to see the unlisted inventory in the back room.
Right. And suddenly, that buyer isn't just buying one name. They're securing a whole bundle of related defensive names or an entire package of AI agent identities in one single negotiated transaction.
Which would take forever on a public site.
You simply can't do that elegantly on a public floor where every item is siloed.
It really does bring the human element back into the equation. So, pulling this all together, our sources outline a pretty massive bull case for this entire dynamic.
They do.
They're arguing that this structured, low-friction private market doesn't just benefit the two people doing the deal, it actually educates the entire Solana ecosystem through something called price discovery.
Which is desperately needed in a young, opaque market. Pricing premium digital identity is incredibly difficult right now.
Yeah, I mean, how do you even start?
Exactly. What is a three-letter Solana name really worth? There simply aren't enough visible public sales of historic mansions to establish a reliable baseline.
So if the deals are happening in private, how does that help the broader market discover the price?
Because every private offer, even the ones that get rejected, is a vital data point.
Really? Even the rejected ones?
Oh, absolutely. It's pure market intelligence. If you own a premium name and someone makes a lowball offer, well, now you at least know someone is actively watching your asset.
Right.
A serious counteroffer helps define the boundaries of what the market will bear. And if a seller suddenly sees a surge of private offers for, say, gaming-related names, it reveals a massive wave of hidden demand.
Way before the public sales data even realizes there's a trend happening.
Exactly. I mean, you're absolutely right. The private offer flow acts as an early warning system. It teaches the entire ecosystem how to value these completely unique assets before the public catches on.
So my read on the ultimate takeaway here isn't that public marketplaces are doomed to fail.
No, not at all.
It's that as the Solana identity market matures, the public and private markets are going to stop competing and start complementing each other. The visible public marketplaces will handle the everyday inventory, the quick flips, the standard names, the clearance bin. Meanwhile, the OTC desk, these structured private offer platforms, they'll handle the high-stakes premium negotiations.
They're just two necessary halves of a mature financial ecosystem. You need the public floor for visibility and baseline data, but you absolutely require the private layer for the serious assets and the nuanced negotiations.
So to tie this entire journey together for you listening, the next time you look at a bustling digital marketplace, remember that you're only ever seeing the tip of the iceberg.
Just the tip.
You're looking at the suburban housing tract, not the historic mansions. True premium value in digital identity isn't just determined by automated algorithms and red and green flashing floor prices.
No, it's not.
It's determined through human connection, real-world context, and private negotiation.
But there's a flip side to that,
Ooh.
which raises an important question as this space evolves. We talked earlier about AI agent teams operating in stealth to buy names. If the absolute most premium digital real estate is increasingly being acquired through private off-book negotiations, what happens to transparency when AI agents themselves become sophisticated enough to negotiate these OTC deals on our behalf?
Wow.
In a few years, the most complex, high-value negotiations over human digital identity might be happening entirely in the dark, in private messages between two algorithms trying to outsmart each other.
Wow. An invisible market, negotiated by invisible agents for our digital souls.
Pretty wild to think about.
That is a wild, slightly terrifying thought to end on. Thank you so much for joining us on this deep dive. Keep looking beneath the surface of the markets you interact with every day because the real value is almost always hidden right below the waterline. We'll see you next time.